Hello everyone and welcome back to the channel. Welcome back to Vertex Investing. Now, firstly, I know it's been a while. Actually, I don't know how long it's been. How long is it? The last video? Oh gosh, 4th of August. So it's been over a month. So I know it's been a while since the last. Who didn't like the video? Gosh. Anyway, anyway, I digress. Um, Welcome back to the channel, and as I said, it has been a while. And to be honest, I've been toying between what topics to cover, and there's a limit to how far I can actually go without being unfair to our paid members. And I don't want to produce content for the sake of it, just for producing, videos. I don't really want to use YouTube as a marketing ploy, to be fair, which in fairness it is, I guess. I guess it is, but I still want it to bring good value to you guys. And I know that some of you guys are doing well. I know that a lot of you guys that reach out to me are doing really well just from the free content. And as always, it's always humbling to see. And I just want to say thank you for all the support for over the year or so that we've been running this channel. Yeah, it's been great. And so in this video, we're going to talk about something I posted a while ago. So although I've not been posting on YouTube, I have been keeping you guys busy with the post in the Telegram group. And again, if you're new, there is plenty of content in here for you to go over in terms of the does it make sense posts. Even these, I've actually struggled to find ones that are quite interesting because they're starting to become quite samey. I don't know if that's a word. Quite what's the word? Basically, they're becoming repeats of each other. Okay, I don't know what the word is, and as you can tell, I don't really plan the videos. I just press record. So I want to talk about these two screenshots because I have two examples that I can actually show you for these. So I got them open here. So I did prepare this actually, to be fair. So fair play to me, I think. Anyway, we'll start off with a counter trend. Okay, so in this video, we're going to talk about how you can use order flow in terms of improving your entries, right? Now, if you don't know what order flow is simply the process of mitigation, okay? And you should know what the process of mitigation is by now. I'm not going to say it in this video. It's you can watch it in another video that I've explained it. But order flow is mitigation. Mitigation is order flow. Okay, that's all you need to know. However, you need to understand the process of order flow and how that actually works, right? Because it's not as simple as having. I see a lot of comments about you guys talking about my drawings. My drawings are not that bad, but anyway, what we can see is we have breaker structure, mitigation. Imagine these are OBs here. Breaker structure, mitigation, and breaker structure, mitigation, and then you have that release, right? In terms of mitigation, this is healthy. In terms of order flow, sorry, this is healthy order flow. We have that process of mitigation, and then we have that full release. But sometimes you have this where you have mitigation, 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 and so on, and then you have that full reversal. When you have too many mitigations happening in one go, that's a sign of weak trend. Okay, and another way to see that is the distance between the moves, the distance between the highs being created, they're going to be a lot smaller. Okay, and that's just showing it's basically a weak trend. Okay, that is the only part. It's quite subjective to the trader and to determine what's weak and what's not, and that's the only thing that's going to take you some time and practice to understand. What is strong and what's weak order flow to you. But all you need to understand is if there's too many mitigations happening in one go, it's most likely not strong order flow. Okay. Anyway, in terms of your counter trend, okay, say you've got bullish order flow, you've got mitigation, you have mitigation, new highs being formed, then you have a mitigation, and then you have that breaker structure. Now, the ideal way to trade, obviously, using this strategy is that you have the breaker structure and you enter off the OB, right? Simple as that. But in terms of enhancing your understanding, you need to understand where order flow is sitting and where it is, right? Because the first breaker structure, as we know, it doesn't mean that it's a change of trend and doesn't mean that order flow has switched, okay? Because this can easily be a liquidity grab. Although we do have an entry point here, but when we have mitigation play, and as I explained in the mitigation video, we do have that process of when you have that mitigation, you have the process of not process. We have an invalidation point, right? When we have that mitigation point that leads to the break structure, the ideal entry point is going to be off the last mitigation, right? And that's what we need to understand, is that your optimal entry or your high probability entry or whatever you want to call it, it's going to be after that second mitigation, right? Or after that first mitigation, sorry, it's going to be on the second mitigation. And the whole reason is that because this confirms bearish order flow, right? That's what you need to understand. And same with this one here. What we have, and this is pro trend, so we've got obviously no reversal here. We have mitigation. Your ideal entry point is going to be from here, because you're following order flow. You're just following that, because sometimes what you have is you'll have these, and in this example here we have this low which created a high. So in terms of our structure points, obviously we create a substantial high from this low, but in terms of following order flow, our order flow is following the mitigation, which is down here. And that's where the process of that's where understanding liquidity comes into play, because liquidity is sitting above obviously every single high and every single low, as we know. And this is a process of grabbing liquidity, because traders will get trapped, and even we get trapped, right? We get trapped in these situations. But if you understand where your order flow is, and you understand the fact that your highest probability entry point is down here with following the mitigation, then it makes sense for you to wait and be patient for that. Okay, and sometimes even we get stopped out on this, because we have with our rule-based system, we do have an entry. We sometimes have an entry point here, right? And we can take the trade, but it's up to you it's up to you to decide what entry point you feel is the most valid and the highest probable, right? So refer to these two charts as much as possible. These are ones that you guys should have as a sort of like a printout, as like a textbook sort of thing. Well, however you want, guys, however you want to store it, you can keep it however you like. But either way, it's in the Discord. It's quite far up. It was posted on the 3rd of August. I think that was just before I posted the video. Yeah, it was. I don't know if I explained this video. I probably did, but I'm probably explaining it in more detail now. If I explained it before, I'm sorry. I don't think I explained it, to be fair. Anyway, so let's look at EU this afternoon. So this was during New York. Now, what we have is, so I was just following price, and I was just following what was going on. Now, this was our high time frame POI, and what we saw was we're having breaker structures, as we have breaker structure here create a high. We didn't have any form of mitigation, which is fine. Okay, we've got no entry point, nothing to be wary about. Then what we have is we have a breaker structure, and then we have mitigation, and then we have another breaker structure. Now, from this point, now what you have that potential bullish order flow confirmation. Okay, well, you do have that confirmation of bullish order flow because you have this mitigation play. Okay, not only that, we have a clear POI that we can trade off. Now, obviously, our trade, I'm not going to explain the entry. The entry was using our inception model, and this is the first time I've actually used the 0.5 pip stop loss. And on IC markets, it wasn't too bad. It was a manual execution in the end. I don't know what a limit order would have done, or whether it would have worked or not. I don't know, but it happened too quickly for me to put a limit order in. So this was a manual execution I took during a one-to-one, actually, during a one-to-one call. Yeah, there's no way I could have fitted in a limit order. But I don't know if a 0.5 pip stop loss would have been okay on a limit order, to be fair. I don't know. But this is a good example of showing you this one, the pro trend. So what we have, well, we don't really have any liquidity points to be, well, no, we don't really have any liquidity points as such. But what we can see is, price obviously didn't come back to here, which is fine. But this is what happens, is some of us wait for these extreme points of unmitigated OBs. And the thing is, you will always have unmitigated OBs above and below your entry point. You just need to understand that. This is where having a rule set in mind, this is why having a rule set removes that guesswork. Like, I would not have even thought about that following our rules and strategy, right? So all we have is literally following the mitigation play that we have, and the breaker structure. What this in turn does is follow an order flow, and we have a perfect entry point. You could have taken the entry point off here, obviously, which would have been fine, and he would have given you, how big was it? It shouldn't be too big. You could have had a 2 pip stop loss on that one, which is perfect if you were going to take it straight off that. Alternatively, obviously, with our entry method, we took it a bit tighter by confirming it further. But that was an example of pro trend. Now I know there's a YouTube comment about me repeating things, so I'm not going to repeat that again. You guys can just watch the video. You guys can just rewatch it again. But essentially, this is the textbook sort of setup that you're trying to look for, and this is a good example of it in actual market, right? Another one was AU. So this is a trade I'm still in. Did I just miss? I think I missed my own POI, you know. To be fair, it's quite late in the day, so I wouldn't have taken anyway. But hold on a sec. Let me have a look. I think I did miss it. Where is it? I did. I missed my... This is the POI I sent in to the group earlier. Gosh, a nice reaction. That is a nice reaction. I don't know if there was an entry. Break of structure came from... It looks like it's heading to an ideal entry point now, but I'm not going to take it from here. The reason is because that's what created that substantial low, which broke our structural range. But it's obviously a bit uncomfortable having all this above. But what you can see is this minor mitigation play sort of going on. Price is pretty efficient, so I wouldn't expect price to go further up. But if price reacts, it'll be ideal. But I'm not going to take this late. What's the point? I'd rather wait for London or New York. We'll see what happens from there. Anyway, I digress a little bit. Let me go find. Let me find my trade entry. So it was here. So I'm still in this trade at the moment. Right. Okay. So this trade was taken on 32nd. There we go. So why is this trade a good example of this? Okay. Now the main thing is, and this is a very textbook reversal setup that you can have. Okay. So in this situation. And I hope this is clear to you guys. So what we do have is a high and we have a low. Okay. Now let's look at what's happened before. So we don't have to go back too far, but what we have is a high. We have a low, sorry, and we have a high, and then we have our structure break. Okay. Now when we had this structure break, what we had was we had a form of mitigation and then a continuation of a bullish trend. Okay. Now, so what we're expecting is for price to react in a bullish way, in a bullish manner. I don't know if that's the right way of saying it, but we're expecting a bullish reaction from this POI, right? I didn't see an entry point here when I was looking on the lower time frames. I didn't see one, but what we saw was this. We had this bearish break. So what does that mean? Okay, so what's actually happening is this. So although we have the mitigation play, granted we only had 2 there, although we had the mitigation play, then we had this violation. So we broke a structure. So not only did we break structure, we've just fractured order flow. Okay. So what does this mean? And this is probably the textbook way of basically catching the apex of a move. Okay. This is probably the best way to do it and the best way to understand it. And it doesn't matter what time frame you're following because, you know, price is fractal and eventually it will replicate. But it'll only replicate to an extent. You need to understand that. You won't be expected. Well, you shouldn't be expecting 1 to 50s, 1 to 100s just like that because it doesn't happen. And not only that, it doesn't mean that you'll hit like 50% on the trade because, you know, unless you've got massive bulls, you know, I don't know who's going to hold the trade and the full position for that long. I mean, I don't. I'm probably holding about 25% at that point, 25% of my risk if I hit when I'm at 1 to 50 by that point anyway. There's no way I'm holding a full position. But anyway, what we can see is this. So we had this fractured order flow, okay, and structure break. Okay, we have our high, we have our low. Then we have a form of mitigation, okay, which now went on to break structure. So because we had this mitigation play, and as I said, you could have entered here. You could have entered. I need to stop scribbling because I know it makes it unclear for you guys. Sorry. We have this form of, I did say in my last video actually, I will plan a video one day that one day will happen. It will happen at some point. I will plan a sufficient, not sufficient, a succinct video for you guys. But anyway, we have this mitigation play which leads to that break of structure, right? So what we have is, and as I said, your optimal entry is going after that second, that mitigation point. Okay, so if you go back to here, you could have taken the trade straight off this OB here, which would have given you, how big? It shouldn't be too big, I don't think. Yeah, so you're gonna have a 2 pip or 1.5 pip stop loss on this one, and took the trade, and you still would have been in there. I mean, I think my trade was ran on to 1 to 50 odd, something like that, or unless it went further. I think it went further. But anyway, I'm only holding 10% of my risk anyway, so it's nothing major. I'm just holding it and collecting the positive swaps as we go along. But as before, as I said, our entry point obviously is using our inception model, which is a little bit different, that we teach in Vertex. But the whole basic and something that you can take away is you can trade just based off this mitigation play. That's all you need. You can trade off that and be successful with it. That's all you need. So if you tie in what's been taught in the previous videos in terms of our higher time frame POIs and so on, if you follow order flow, that's it. You've got it. You've got it all. You've got it all. And these are screenshots which I suggest you keep somewhere, or keep a reference of it somewhere, so you know what to look back to. And you can just look. You can look at this and then compare it to your setup and see, does it make sense? Is it the same? And the thing is, I don't want you guys to replicate it. I don't want you guys to try and copy it. I want you guys to try and gain an understanding of it, because when you have that understanding, that skill is so powerful. Whereas if you're trying to copy something, you'll struggle because you lack the understanding. So you're basically trading blindly, and we don't want to risk our hard-earned money, on stupid trades because we don't understand it. We want to make sure we have as much understanding as possible before we take anything, right? So to recap, and I'm not going to give you a full thing. What we need to understand is where the order flow is, where the order flow transition is, and then simply follow the mitigation. As simple as that. And then refer back to these two to understand whether you're going to go pro trend or counter trend. I suggest starting with pro trend to begin with, because it's probably the easiest way to go about it. Counter trend requires, it's lower probability to start off with, I have to admit, but once you gain that understanding and confidence, you'll be happy with taking the trades using the process of mitigation. As long as you understand where your order flow is, you're all good. And your order flow, as I said, your order flow is mitigation. Okay, that's all it is. So it's not too complex, and all you have to do is tie in what's been said. And obviously re-watch these videos, and I hope this video was useful, because I know it's been a while since I last uploaded. So as I said, I want to upload as much value as I can without obviously being unfair to our paying members. But I didn't have this stuff when I first started. I didn't have free content, so I want to make sure it's accessible to as many people as possible who can't afford our mentorship. Because as I say in several of our videos, you don't need our mentorship or course. You don't need it unless obviously you want that support and guidance from us, which obviously does make a difference, and it does obviously help with your accountability side of things. But if you really can't afford it, I hope that YouTube content is enough to make you profitable. And I've seen it in some of you guys that have reached out to us. I've seen it in the emails that we get daily, and Telegram messages. It's always great to see. So I hope this video is useful. But for now, I will see you whenever I upload next. I'll think of another topic. I don't know how long it's going to be. But I hope you guys enjoyed this video. And again, sorry it's been a while, and I hope you all take care of yourself, and God bless.